changes do you see coming out of the recession for industrial real estate?
I see it two different ways. One from the tenant or buyer perspective. Capital is starting to flow again. So in a depressed real estate market right now, there's more opportunities, to spend your capital wisely and get a great, value for what you're getting into, whether that's a lease or an own. And there's more lenders willing to lend. So that's what's coming out of the recession. There's just more activity and more buyers and sellers meeting, in a fair place.
It's been kind of a depressed market, certainly during the recession, but are there any areas of the country where you see particular strength right now or reviving?
Yeah, well, when you take $89 billion of inventory out of the warehouses and industrial facilities throughout America, there's a lot of vacancy. So the areas that we see right now that have continued strength were the markets that did not get overbuilt, that there was conservative construction, conservative build. So those are most of the tier 2 markets have already went from the falling market condition to a stabilizing market condition, whether that's a Nashville, Tennessee, or that's a Columbus or a Jacksonville, or places that just didn't get overbuilt. Where we see the real opportunity still over the next 12, 18 months is the tier 1 markets. The Inland Empire, Dallas, Chicago, Atlanta, Northern Jersey. There's still tremendous and great assets that were built '07, still have not been occupied here in the middle of 2010.
How have lease rates been?
Lease rates have returned to stability in the tier 2 markets, and they're still continuing to fall in the tier 1 markets because there's been a larger gap between seller expectation and buyer expectation, or landlord expectation and tenant expectation. So that gap's finally closed, and there's finally activity back. So you'll see those recorded real estate and the face real estate on the rental rates and the purchase prices, you'll see that get dropped. Probably end of 2010, we'll see that sort of hit bottom and then start rising again like you have in the tier market.
What particular challenges do you see for your segment of the supply chain industry during 2010 and on into next year?
Yeah, I think our challenges is right now there's a lot of volatility and variables throughout the whole supply chain market. So if you're looking to make a multi-tens of $million location selection decision, you're certainly hoping to solve some of those variables and have some tighter sensitivity. So I think our challenges are, specifically how do you solve for some of the variables that have created complexity, whether that's transportation, whether that's what level of inventory do we carry, whether that's how much headcount versus capital investment do we make in technology. We still see companies wanting to sort of vet that out some more.
Thank you.